Hey there, good to see you. So, you might have seen the headlines. Home prices are dropping in a bunch of cities across the country. And if you're like most folks, you're probably wondering, wait, what does that actually mean for me? Is this a good thing, a bad thing, or just another weird shift in the economy? Because on the surface, falling home prices might sound like a win for buyers. But there's more to it. What's happening right now could be a warning sign of something much bigger under the surface. And here's a stat that really caught my eye. Home prices in over 100 major metro areas in the US are now lower than they were last year. That's a huge jump from where we were just 6 months ago. And guess what? The areas that boomed the most during the pandemic, like Austin, Tampa, and Miami, are now leading the way in losses. So yeah, it's not just a small dip in prices here and there. It's starting to look like a pattern. But before we go deeper into this, I'd love to hear from you. Have you noticed changes in your local housing market lately? Are homes sitting longer, prices softening, or have things stayed pretty steady where you are? Let me know in the comments. I love reading what you're seeing. It helps all of us build a clearer picture together. And hey, if you find this kind of content helpful, or you're trying to better understand what's going on with your money, your home, or the economy, consider subscribing. I'd love to have you here. All right, let's talk about why this is happening and why it's bigger than just the housing market. You see, housing isn't just about real estate listings or homeownership. It's a major pillar of the economy. When housing slows down, it doesn't just affect buyers and sellers. It ripples into construction jobs, home improvement stores, mortgage lenders, furniture companies, even your local hardware store. So when experts start throwing around words like red flare, like Moody's chief economist did recently, it's worth paying attention. You see, a big part of what's causing this shift is mortgage rates. Right now, we're hovering around 7%, which is way up from the 2 or 3% a lot of folks locked in during the pandemic. That makes a huge difference. Think about it. If you bought a $400,000 house at 3% interest, your monthly payment might have felt doable. But at 7%, that exact same house could now feel out of reach. So what happens? Fewer buyers. And when there are fewer buyers, homes stay on the market longer, sellers start lowering prices, and the whole market cools off. And also, a lot of current homeowners feel stuck. Maybe they want to move, but they're locked into those ultra-low mortgage rates. Selling now means taking on a new loan at a much higher rate. And for a lot of people, that just doesn't make sense financially. This lock-in effect is keeping a lot of homes off the market, which is part of why inventory has been weird lately. Rising in some places, staying super tight in others. But even with those locked-in owners, total inventory has actually gone up. In fact, the number of homes listed for sale jumped from under 830,000 at the start of the year to over 1.1 million by June. That's a big move. And yet, even with more homes on the market, a lot of sellers are pulling their listings too, maybe because they're not getting the offers they hoped for. According to Realtor.com, delistings are up 47% from last year. That's a sign that people are feeling unsure. Now, you might be thinking, wait, isn't more inventory supposed to be a good thing? Shouldn't that help buyers? And yeah, in theory, more inventory can bring prices down, which helps with affordability. But here's the catch. When prices fall and mortgage rates are high, it's still really hard to buy. So we're stuck in this strange middle space where sellers don't want to sell, buyers can't afford to buy, and homes are just sitting. And builders? They're feeling the pressure too. New home construction has slowed down. In June, single-family housing starts dropped nearly 5%, and new home sales fell by over 13% in May. That's a steep drop in just 1 month. Builders are holding off on buying land, delaying projects, and offering fewer incentives. Some of them were covering part of buyers' mortgage rates to keep deals moving, but that's getting too expensive to maintain. Now, let's talk geography for a second, because this isn't playing out the same way everywhere. The biggest price drops are happening in the South and the Mountain West, places like Texas, Florida, and Arizona. These were the hot markets during the pandemic, thanks to things like remote work and domestic migration. But they also saw the biggest price spikes, which means they had the most room to fall. And now that affordability is stretched thin in those areas, prices are pulling back. On the flip side, places like the Midwest and the Northeast are holding up a bit better. They didn't see the same crazy price increases during the boom, and they haven't built as much new housing, so there's less pressure on the market. But still, even those markets are starting to feel the pinch from higher rates and economic uncertainty. And speaking of uncertainty, let's look at the bigger picture. The Federal Reserve has kept interest rates high to try and bring down inflation, which has made borrowing more expensive across the board. Not just for mortgages, but for car loans, business loans, credit cards, all of it. The idea is to cool down the economy without causing a recession. But housing is sensitive. It reacts quickly. And when housing slows down, other parts of the economy tend to follow. So what does this all mean? Is the economy weak? Well, that's the big question. And honestly, it depends on how you define weak. Right now, job numbers are still relatively stable in a lot of sectors, and consumer spending hasn't totally collapsed. But the housing slowdown is real, and history tells us that when housing stumbles, it often signals trouble ahead. Ed Leamer, an economist you might have heard of, once wrote that housing is the business cycle. Basically, when the housing market shifts, the rest of the economy usually follows. Fewer people buying homes means fewer people renovating homes, fewer furniture purchases, fewer jobs in construction and real estate. We're already seeing signs of that with layoffs in housing-adjacent sectors. And get this, unsold home inventory is now at the highest level we've seen in 15 years. That's dating back to the 2008 housing crisis. Now, I'm not saying we're headed for a repeat of that. The financial system is much stronger today, and we don't have the same kind of risky loans floating around. But it does mean that housing is a stress point right now, and it's one the rest of the economy is watching closely. Also, President Trump's administration has mostly kept hands off when it comes to the Federal Reserve, letting it operate independently. But there are ripple effects from his other policies, like tariffs, that are adding pressure. Builders are paying more for materials. Labor is more expensive, and uncertainty about the future is making it harder to plan. So then, what should we be watching moving forward? Well, first, interest rates. If the Fed sees enough signs that inflation is coming down, we might see rate cuts later this year or early next. That could give the housing market some breathing room. Second, wage growth and job stability. If people feel secure in their jobs and incomes, they're more likely to buy, even at higher rates. And third, we need to keep an eye on consumer sentiment. If people start pulling back too sharply, it could tip the balance. But there's still hope. We could end up with what economists call a soft landing. That's where the market cools down just enough to bring prices back to reality without crashing. If builders adjust and shift toward more affordable homes, if mortgage rates drop just a bit, and if inflation keeps easing, we could find a new balance. It won't be overnight, but it's possible. So yeah, falling home prices can look like a good thing on the surface, especially if you're hoping to buy. But they can also signal deeper issues in the economy. What I'll be watching next is whether this slowdown stays regional or spreads wider, because that will tell us a lot about what's ahead for everyone. And as always, I'd love to hear what you think. Are you planning to buy or to sell a home right now? Are you waiting it out? Drop a comment below. Let's talk about what's happening in your area and how you're feeling about it. Thanks so much for being here. And if this kind of clear financial content is something you find useful, consider subscribing and sharing with someone else who might benefit too. Take care of yourself, and I'll see you next time.